The NAB's business survey results are out. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of Heise Says. Lunchtime, NAB have released their monthly business survey results and I'm here with my stein of coffee to have a look at it with you. So here we go, we've got the results here, but what actually is this survey? And I thought we'd have a brief look at just Investopia. Now, it is a business confidence survey and it's been running since 1997. Its index is closely watched to gauge the overall condition of the Australian economy. And what they do is, there's the question they're asking here, it's excluding normal seasonal changes, how do you expect business conditions facing your industry to change in the next 3 months? And then the results are calculated as positive, less negative responses, and there's a net balance. So it's usually trends up, and the average has been about 6 since they were running it, since 1997. And I will link to this Investopia article if you'd like to learn a bit more about it. But with that in mind, it's good to dive in and just have a look at these results because, well, we'll jump back over here to the trading economics, and you can see that it was, the actual result was 4. Previously it was 2. And remember, you know, it's based on that question, is the number of responses. So if you're having a positive number, it's more positive outlook for the next 3 months. If you have a negative number, it's a more negative outlook in the next 3 months. The consensus in the trading economics forecast was both 3. So notice how they're, I don't know why they got a forecast for 6 in September, but maybe they're already jumping ahead. So there you go. It's higher, slightly higher than what they've predicted, but we'll look at the max range of the data here, and you can see here, around 2008, it shot down to below 30, and it's never been above, or the height was 21, the highest point there. So that just gives you an understanding of where we're sitting. We're sitting below average with business confidence. So let's dive into this article, or this really paper, and get a bit of an understanding. Now, it's from July 2019, and it was held from it was embargoed, so it wasn't released until 11:30 today, Australian Eastern Standard Time. Because, I mean, this is sensitive economic information. One of the issues I have with the whole crypto sector is that people will release, financial information or press releases just on Twitter, and it's not as rigorous as the traditional markets, and there's not as much security around it, so there's a whole lot of insider trading opportunities and just these dodgy things. That's the one thing where it's still a bit of the Wild West. So back to this, the key messages from the survey. Broadly, the picture from the business survey is unchanged from last month. The key message being that the business sector has lost significant momentum since early 2018, and that forward-looking indicators do not point to an improvement in the near term. In the month, conditions edged lower, but remain within its range over the past 4 months. Confidence ticked up after a sharp fall last month and a period of volatility around the federal election. Both remain clearly below their respective long-run averages. Forward orders are well above average. Are well below average and negative. While capacity utilization is now back around average, pointing to little improvement in the short term. The decline in conditions and capacity utilization appear to have fed into business decisions, with the employment index and CapEx also weakening over the past year. Weaknesses in the retail industry continue to stand out. We've discussed that for the last few days, with conditions in that industry at recessionary levels and declining further in the month. So it's in recession and it's recessing more. A worrying result, given we expected some boost to the industry following the post-election tax cuts. More broadly, the lift in confidence following the election appears to have faded, with little impact on actual conditions. Well, there you go. I mean, just this morning, I did a video that the tax rebate wasn't working to stimulate the economy, and we were reading about David Jones and other larger department stores in trouble. It looks like JB Hi-Fi is the only good beacon in the retail sector. It appears that both the cut to interest rates and boost to tax rates is yet to feed into the business sector, and that the weakness in quarter 2 has persisted into quarter 3. I wonder if it will actually feed into the business sector. So the highlights. How confident are businesses? Confidence edged higher in the month, but remains below average at +4 index points. Now remember, it generally trends positive, the numbers on this. So the average is +6, regardless of, it shot down at the GFC. So +4 is not that good. How did business conditions fare? Business conditions recorded a small fall in July from an upward revision last month to +2 index points. While conditions remain positive, they are below the long-run average of +6 index points. What components contributed to the result? The fall in conditions was driven by a fall in the employment sub-index and a small fall in trading conditions. The profitability index ticked up, but remains around 0 index points, the threshold of improvements versus deterioration. So as many people are deteriorating as many people are doing well. So what is the survey signaling for jobs growth? Based on historical relationships, the survey suggests that employment will grow around 15k per month over the next 6 months, which is unlikely to see a material improvement in the unemployment rate going forward. Which industries are the driving conditions? Okay. Construction. Retail and wholesale saw sharp declines in the month. That's not surprising. Partly offset by increases in mining, transportation, utilities and finance, business and property services. So, if we just pull this apart, if mining starts to decrease because of changes to the iron ore rate, among other things, but the Aussie dollar is dropping, so that may offset it. Transportation and utilities, well, transport is going to be hit because petrol is going up as well. We're seeing that. Finance, business and property, well, we all know how property's doing. Overall, in trend terms, conditions remain most favorable in mining, while retail remains weakest. Manufacturing and wholesale are also weak. Remember, this is from July too. So this data is already weeks out of date by the time it's being released to the public and the market is responding to this data. So that's the whole, we're trying to use past information to make results, but it's the best we can get. So which industries are most confident? What ones do you think, guys? Confidence generally strengthened in the month and saw a small rise in retail on the back of tax cuts. Remember, this is from July. It's probably disappeared now. But was lower in mining and edged down in manufacturing. Outside of mining, in trend terms, confidence is highest in finance, business and property services and weakest in manufacturing and rec and personal services. Where are we seeing the best conditions by state? Conditions fell in all states in the month except WA, which saw a large spike. In trend terms, conditions are bunched across the mainland states at 2 to 4 index points, while Tasmania remains high. Well, let's, I'm going to jump here. 1 second. We'll just look at the commodity price. Because if Western Australia saw a large spike, and remember this is from July, if this is from July, a large portion of their exports, let's just look at the price here for iron ore in July. Well, there you go. There you go. It was at $124. So perhaps that could be part of the reason why it saw a large spike. It was at a huge, at a high. How far out can this one go? Oh, it's been, since 2016? When was the last time it was that? 2014 was the last time it was at that price in July. So I would just hazard a guess, bit of theory crafting here, that might be why Western Australia saw a spike. I mean, we have a look here. Let's jump back to my favorite website, Observatory of Economic Complexity. And remember, iron ore, we're sitting at 20% of the export economy. Large portion of that's going overseas. Well, all of it's going overseas by definition, being exports. Flying idiot. Large portion of that is going to China, and a large portion of our exports to China, 61% of that is coming from WA. So, I'll just hazard a guess, putting those little puzzle pieces together. What do you think in the comments, guys? Let me know. Let me know. Before I go on, I'm having another swig of my Steiner coffee. Okay. So, what is confidence like across the state? Confidence rose in all states except Queensland. Fall. Oh, come on, Queenslanders. Victoria, flat. In trend terms, confidence remains high in SA and weakest in Tas. Wow. though the latter has been volatile. Are leading indicators suggesting further improvement? Leading indicators remain weak. Forward orders rose slightly in the month, but remain negative and well below average. Capacity utilization unwound its increase last month and is now back to around average levels. What does the survey suggest about inflation and wages? Overall, the survey continues to point to weak inflationary pressure in the economy. Both input costs and final products, including retail after falling sales last month, rose in the month. Labor costs growth unwound, some of it spike in June. So here are the key statistics. Business confidence, you can see here. Forward orders, -3. That's not good. Chart 1, below average confidence conditions. So business confidence conditions and business confidence. Yep. If that's the average of 6. So themes of the month, retail weakness. The official ABS measure of retail sales for June, notwithstanding an improvement late in the quarter, showed that the volume of retail sales had slowed to its lowest since the 1990s recession. This follows a weak result in quarter 1, which saw household consumption growth slow, and given its large share of GDP, around 60%, contributing to a very weak outcome for private sector growth. So we can see there retail sales are going down. Retail conditions and confidence. Conditions are in black. Whoa, look at that. And confidence, not very good. Slightly uptick. Retail sales growth. Here, we'll zoom in here. Can you see that? There we go. Retail sales growth. And there you go. Slightly ticking up. How much? What do you reckon? That's just result of the election. Retail conditions. Wow, that's not good. Components of retail conditions: employment, trading, and profits trending down. Subsector conditions, so cars, other, food, household goods, trading down. So let's have a look here. Business confidence, net balance slightly up. Business conditions, net balance, yeah. And chart 8, components of business confidence, trading, profitability, and employment. Employment down, profitability slightly. Yeah, it's not looking very good anywhere, is it? Business conditions and confidence, yeah. I mean, just look at that, guys. Business conditions by industry. Retail, whoa, down. Business conditions, manufacturing down, wholesale down. Transport utilization, construction up, surprising. Rec and personal up, but business confidence still is not very good. Still is not very good. And business conditions by state. We can have a look over here. So, here we go. And we have the chart 12, forward orders. Oh, I mean, this seems to be painting the same picture, guys. I will link to this report if you'd like to go through all the charts at your own leisure. But, yeah, I think it'll be interesting to see where it's going. It's trending down. Confidence is slightly up. WA has spiked, and I seem to, I would argue that's to do with a large portion of their mining sector has spiked then, and we can just see everything seems to be trending or below average. So let me know, where do you think it's all heading, guys? Is this the stable economy that the RBA is telling us? Is it the confident, improving economy that all the real estate agents are telling us and encouraging us to invest in? Let me know what you think, guys. Like, share, subscribe, ding the bell, and I'll see you later today. Take care.